According to a Commerce Department report issued Friday, inflationary pressures dropped marginally in May as consumer spending slowed significantly. The Personal Consumption Expenditures Price Index, widely watched by the Federal Reserve, climbed 0.3% for the month when food and energy were excluded, matching the Dow Jones forecast. Core PCE climbed 4.6% year-on-year, 0.1 percentage point less than projected. In April, the index increased 0.4% month-over-month and 4.7% year-over-year. When volatile food and energy components are factored in, inflation is much lower, up only 0.1% month-on-month and 3.8% year-on-year. These were lower than the 0.4% and 4.3% gains recorded in April. The headline year-over-year figure was the lowest since April 2021, while the core figure was the lowest since October 2021. While inflation fell somewhat, expenditure increased by 0.1% in May, falling short of the 0.2% projection, and a steep decline from the 0.6% gain in April. This slowdown occurred despite the fact that personal income increased by 0.4%, above the 0.3% forecast. The spending splurge is likely nearing its end as consumers released most of the pent-up demand for spending, said Jeffrey Roach, chief economist at LPL Financial. Despite the fact that Friday's statistics showed inflation steadily going in the right direction, it remains significantly over the Fed's 2% longer-term objective. This threshold, according to central bank chairman Jerome Powell, is unlikely to be reached for several years. Fed officials signaled earlier in June that they expect at least 2 more quarter-point interest rate rises before the end of the year. Even Atlanta Fed President Raphael Bostic, who is opposed to additional rises, indicated Thursday that he does not expect any cuts this year or in 2024. Traders are putting in an 87% likelihood that the Fed would approve a quarter-point rise at the July meeting, according to CME Group calculations, which have not altered much since Friday's data release. As prices have risen, people have slowed their spending and saved more money. The personal savings rate increased to 4.6% in May, up from 4.3% in April. Spending has also shifted back to services, reversing the COVID pandemic trend of customers shifting more to higher-priced items. According to the Commerce Department's Bureau of Economic Analysis, spending on services increased by $52 billion last month, while spending on products decreased by $33.1 billion.